Live from London, this is Bloomberg Daybreak Europe. I'm Lizzie Burden with your top stories. TSMC smashes estimates for net income and gross margin. The numbers from the world's biggest contract chip maker adding to hopes that the AI trade has room to run. Oil falls after President Trump signals he may hold off on attacking Iran for now, and silver slumping following its blistering rally. Plus, no deal on Greenland. Denmark says a fundamental disagreement remains with the US after talks in Washington. German soldiers arrive on the island today as NATO allies look to boost their military presence. A very good morning. Welcome to the programme. It's just gone 6 a.m. here in London, and your markets look like this. Futures pointing higher here in Europe, but take a look at these moves in commodities. We've got oil down. The president saying he's going to hold off on attacking Iran for now. Silver down on the less demand for safe haven assets. Also, the president saying that he's going to hold off on new tariffs on critical minerals for now. So these moves perhaps more about what the president isn't doing at the moment. But let's take a look at the risk events on the horizon for today. Later on, we're going to get economic data on both sides of the Atlantic. Top of the hour is UK GDP. Really interesting after those gilt moves yesterday. We're also going to get more bank earnings from Wall Street, and then at 1:30 p.m. London time, we'll get more economic data stateside. But here in Europe, we've already got some earnings to bring you, and they come from Richemont, reporting a beat on its third quarter sales, 6.4 billion euros. The estimate was for 6.25 billion euros. So this is the maker, of course, of Cartier and Van Cleef. Could this set the tone for the rest of luxury this quarter? Let's set you up for the day ahead. We begin with more earnings. TSMC surpassing expectations with strong profit growth after reporting a net profit surge 46% in 2025. Now, the world's top contract chip maker also reported a 35% increase in fourth quarter profits as demand for AI hardware booms. Let's speak now to Bloomberg Intelligence senior analyst Robert Lee. Rob, good morning. What do you make of these results? What should investors be focused on?
OK, thanks for having me on. I think you set the tone in your intro there. These are very strong numbers, as expected, a few percent ahead at the bottom line, but they're strong indeed. They vindicate the ebullience and optimism that the likes of Jensen Huang have been iterating, and also that ties in with what TSMC's CEO has been saying as well. So if anybody's looking for signs of weakness in the AI boom at the moment, you're not going to see it in the reported TSMC numbers. But what people are going to be focused on, of course, with the earnings call ongoing as we speak, is the guidance they set. I don't think there's any great room for surprise in the near term, given the strength of demand on AI. The full year guidance as well, from where we sit at the moment, should also be robust. But there are a growing a minority of investors and others, given the universal positivity on the AI outlook, which are looking for cracks, which are looking at the potential things that could go wrong. I think it's going to be a very interesting year on the AI front. But if you're looking for signs of weakness in TSMC results, they're just not there at all. These are very strong numbers.
Really? So when you're looking at the international read across of this, what would investors be most focused on for you? If there are no cracks here, what are we likely to see?
Well, as I said, the market always looks ahead. So what I've been saying so far is about the past. This is in the rearview mirror. They've had a fantastic year. Guidance, etc., will be strong. But I think if you take a step back, if you look at the risk profile of a business like TSMC, it has a relatively concentrated customer base. It's AI that is, singularly driving the top line strength. Again, I don't expect that to change in the near term. But in turn, they're very reliant on the likes of NVIDIA, who in turn are very reliant on a relatively small group of hyperscalers. So it's a very concentrated risk. So near term, I don't expect to see any concerns on that front. But then ultimately, what's all this AI infrastructure being driven by? It's being driven by the software companies who are still struggling to monetize. So I think as we go through the year, if we're not seeing more signs of monetization or a significant pickup in monetization coming through on the software front, then I think these potential anti-consensus views are likely to grow in volume. The likes of Michael Burry, who has gone publicly recently saying that he's taken out a short position on Nvidia, would the likes of him and people who are looking at things from a more negative lens grow in their confidence. So I think those are the obvious risks out there at the moment, but you would not see them by looking at TSMC's numbers.
Appreciate the analysis, Rob. That's Bloomberg Intelligence senior analyst Robert Lee. And Bloomberg's Annabelle Drewlers is going to be speaking to TSMC's senior vice president and CFO off the back of the fourth quarter earnings report. That interview coming tomorrow. But let's get now to the market reaction. Winnie Shu's got the view from Asia. Winnie, what are you seeing?
Yeah, morning, Lizzie. So just speaking of that TSMC results, actually, we're seeing a quite interesting reaction in the markets because while we've got that very strong set of results, actually the MSCI Asia Tech Index just pairing a bit of a losses there, still not moving quite a lot. And that's also probably because how, as our MLive strategist put it, it's an unsurprising surprise given just how strong the results have been so far for the company. So overall, yes, TSMC right now here not trading due to the because the local markets are closed already, but related stocks in Japan here still under some pressure amid this rotation away from the big tech names after this strong rally. Now flip a board and take a look at the broader Asia market. Overall, a bit of a mixed picture there. As we mentioned, Japanese stocks still under some pressure. However, Kospi here again rising for 10th day by now, and we're just about 4% away from that 5,000 target that was set by the president Lee Jae-myung. And when it comes to the CSI 300, fluctuating a bit, sentiment is still weak after regulators step in to cool the market. Now flip the board and also take a look at the currency space, as there's a lot going on right there. The Japanese yen here flat-ish. However, the Korean won is actually coming back to its resuming its weakening trend, and this is coming after how Scott Bessent was warning against the weakness and the volatility of both currencies, but that's not really doing the magic, and neither is that the hawkish comments from the Bank of Korea, even after they kept rates steady. On the flip side, seeing edging higher here is the Chinese yuan, and that's coming after PBOC set its strongest fixing since 2023. Back to you, Lizzie.
Winnie, thank you so much. That's Winnie Shu in Hong Kong. Well, let's broaden this market's perspective now and go to our Bloomberg Markets Live executive editor, Mark Cudmore. Mark, I wonder how impactful these TSMC earnings could be for wider markets, for broader AI optimism, and really if they'll fuel this shift away from US big tech stocks and towards Asia, as Winnie was saying.
I think in terms of the last part of your question there, marginally, yes, they will support the ongoing trend of Asian outperformance US stocks. We've seen that for the last year, and we expect that to continue. We think that's a long-term trend in terms that many Asian stock markets are much more discounted than US stocks. However, in reality, in the short term, there's not much read across here. Look, TSMC earnings, super strong. They're an important major stock of the AI capex bubble. But we know the AI capex bubble is super strong. We weren't expecting it to be disappointing. TSMC haven't failed to beat earnings for about 4 or 5 years. So of course they're going to beat earnings. This is, again, as one of my colleagues said, an unsurprising surprise. Right now there's really nothing. The one maybe read across that we might get is in the press conference if we get some interesting numbers on capex. But again, TSMC's not one of the big outliers here. It's a bit more the secondary play. It's kind of driven by what's happening in some of the capex spending in the US. So we're in a massive AI capex bubble, but TSMC is feeding off that rather than driving that. I think the expectations are for about a little over 10% increase on last year on capex. If there's a massive deviation from there, we'll get a bit of excitement in the European day. But otherwise, no. It just reiterates the trend. The AI capex bubble is still going strong. It's definitely not blowing up on fourth quarter earnings. It's going to carry into this year. It will blow up at some point, but not yet. And therefore, the Asian stock story is fundamentally strong, though we've reached a frothy period in recent weeks.
OK, we'll keep an ear out on that presser through the next hour. We've got a fantastic T-Live blog running across it as well. The other big moves, notably today, Mark, are in commodities, silver tumbling. Is that just a knee-jerk reaction to the Iran and tariffs news, or are traders going to be itching to get back into commodities very soon?
Silver's lost the plot, Lizzie. It's gone crazy. I mean, like we were trading, yesterday. Records are made all the time, and it was 100% higher than where it was trading in October. Sure. At one point today, we were down 7%. When I walked into the studio, we were down 5%. It's swinging about crazily. This is a market that is normally a high beta play on gold, and it's been massively high beta. So it's significantly outperformed gold. In such scenarios, it doesn't normally do well 1 year ahead. I think we are absolutely in a silver bubble that's not sustainable. Are we at the end of it? I think this is the kind of volatility you get at the end, but that we might be at the beginning of the end rather than saying this is a turning point. I wouldn't, when you've got a bubble, you don't necessarily want to fight it till you know you've turned it. In fact, normally when you identify a bubble, you hop on board and ride it to near the end. I would say that if you have been fortunate enough to be riding the silver bubble, it's time to get out, but not necessarily the time to fight it.
OK, Mark Cudmore, Bloomberg's Markets Live Executive Editor, we thank you. And we stay with commodities because oil is falling for the first time in 6 days after President Donald Trump signalled that the US may hold off on attacking Iran for now. Now, Trump says that he's been reassured by sources that the government in Tehran will stop killing people who've been involved in the protests.
The killing in Iran is stopping, and it's stopped, and it's stopping. And there's no plan for executions or executions. So I've been told that on good authority.
Let's bring in Bloomberg's Charu Chanana now, Bloomberg's Horizons Middle East and Africa anchor. Chanana, I enjoyed you quoting Napoleon Bonaparte on your show. Never interrupt your enemy when they're making a mistake. Is there a sense that President Trump decided that the protests in Iran could bring down the regime without his intervention? Is that intervention militarily still on the table? Good morning.
Good morning, Lizzie. Well, it certainly appeared to be the case 24 hours ago that they were almost ready to go. And remember, we spoke about his Truth Social post where he said help is on the way, and it actually encouraged the demonstrators to keep going. So a bit of a turnaround in the last 24 hours for sure, which is why you're seeing a lot of that geopolitical premium come out in things like oil and in silver this morning. But essentially, President Trump is saying that he's going to hold off striking Iran for now. The for now, obviously, here is key. We know that many of the U.S.'s allies in the region, Arab leaders, have been against the idea of U.S. intervention. Yesterday, we spoke about the comments that came through from Qatar, warning that U.S. intervention could be, quote, catastrophic for the region. Indeed, throughout the course of the day yesterday, there were reports that U.S. military personnel were being asked to evacuate that Al Udeid base. So again, there was a sense that something might happen, but Trump has stepped back from the brink now. And we've also had some commentary from Iran themselves. The Iran foreign minister had a call with the foreign minister of the UAE, and he said that calm is prevailing on the streets. Now, again, it is difficult to ascertain what is going on. The communication blackout is still ongoing. There haven't been a lot of posts being uploaded, but what we do understand from human rights agencies is that is not the case, and that the death toll continues to climb, and it is sitting closer to around 3,000 here. So it is a case for now that the U.S. seems to have stepped back from the brink, listening to perhaps some of the advice that's coming through from their allies in the region. But then, Lizzie, even though we talk about military intervention, there are other ways that the U.S. can also get involved as well. And we spoke about sanctions earlier in the week, that 25% tariff on countries still trading with Iran. They could help with introducing or encouraging or reintroducing communications, Starlink back to the protesters as well to help on cyber, and then can also go after key individuals in the regime too. So there are other methods that the U.S. can pursue. For now, though, military seems off the table just for now.
OK, Bloomberg's Chanana, thank you so much. And Chanana will be back with Horizons at 5 a.m. London time tomorrow. Still ahead on Daybreak Europe, though, we'll stay with the geopolitics and we'll be speaking to Mike Sfraga, former US Ambassador at Large for Arctic Affairs, about the US's ambitions for Greenland. And this, of course, after the Washington meeting. No deal. The Danish foreign minister saying a fundamental disagreement remains after meeting top diplomats in Washington as Trump continues his push to take over NATO. NATO ally Greenland. Well, more on that next. This is Bloomberg. Welcome back to Bloomberg Daybreak Europe, 6:17 a.m. here in London. Now, an exploration mission of 13 soldiers from Germany will arrive in Greenland later today as European nations work out how to ensure security in the region and respond to US threats over the island. Meanwhile, Denmark says a fundamental disagreement remains over the Arctic territory following a meeting with top US officials.
We have decided to form a high-level working group to explore if we can find a common way forward. The group, in our view, should focus on how to address the American security concerns, while at the same time respecting the red lines of the Kingdom of Denmark.
For more on this, I'm joined by Bloomberg's Copenhagen Bureau Chief, Sarah Scholin. Good morning, Sarah. Was there any progress made in this Washington meeting?
Yeah, I think as the Danish foreign minister just said, they set down this working group that will try to set out a path forward. And as he rightly says, what they hope is they'll be able to address some of the security concerns that seem to be driving this push to take over Greenland. Having said that, it's also very clear that they did not diffuse the threats of Trump pursuing Greenland. That was the hope, but not really the expectations that they would get that out of the meeting. But the sense is that we got as much out of it as possible. The situation didn't escalate, and I think that was what some people was concerned of going into this meeting.
And how significant is it that Germany's sent troops to Greenland?
Well, it is quite significant in a way that we haven't really seen a joint NATO, a joint EU mission there ever. So this is the first time we're going to see a lot of these countries coming together and sending military personnel up there. This is obviously also a way to signal to Trump that, yes, Europe is taking the security and defense of the Arctic seriously. And now we're showing that there is, well, I can't say no reason to be not concerned anymore, but definitely that Denmark and Europe is stepping up security.
OK, Sarah, thank you so much. That's Bloomberg's Copenhagen Bureau Chief, Sarah Scholin. And coming up, we'll bring you the view from Washington. Republican Senator Tom Tillis saying that Donald Trump is not getting good advice in his quest to take over Greenland from a NATO ally. We'll get you more on that interview next. This is Bloomberg. Welcome back to Bloomberg Daybreak Europe. Now, Republican Senator Tom Tillis says that President Trump's getting bad advice, including on his pursuit of Greenland. He told Bloomberg's Balance of Power co-anchor Joe Matthew there's no support in Congress for such a takeover.
We need people to make sure the president has a fully weighted set of criteria before he moves forward on some of these policies. I see no path where his aspiration for Greenland occurs unless it's a negotiation and something far short of what he has in mind.
We talked to Senator Chris Coons at this time last evening, who I know is taking part in a bipartisan codel to Denmark with you and others. He was strident in his language, making it clear that NATO is at stake. Is that where we are?
No, I think we're going to get into a little bit of hyperbolic language here. Okay. Chris is a friend of mine. He's a Democrat. I could see where he's may take that position. But I've been the Republican leader of the Senate NATO Observer Group since 2018.
Yes.
I'm going there to reassure everyone that unlike what angered me last week was one of the president's advisors making the statement that it was the position of the U.S. government that Greenland would become a part of the United States.
Yeah.
He doesn't have an election certificate. He is not a member of the Article 1 branch. I am. It can be his position. It can currently be the position of the president. But the people, the people in Denmark, the NATO countries, our allies, our partners, the people who have gone to war with us, fought side by side with us, lost lives when they came to Afghanistan, consistent with their Article 5 commitment in NATO. I want to make them very aware of the fact that there is not support for this in Congress, regardless of what they may say in the White House. I think that an illegal taking of another territory and from a sovereign nation and a member of NATO is just not good advice. And I'm going there to tell them there's at least one branch of government that stands with the NATO alliance.
Now to some other top stories we're following for you this morning. President Trump has prevailed in unifying his party behind his takeover of Venezuela. All but 3 Senate Republicans voted to block a resolution opposing further military action in the country, with Vice President J.D. Vance as the deciding vote. It comes as Venezuela's opposition leader, Maria Corina Machado, prepares to meet President Trump at the White House later today. Staying in the US, Homeland Security Department has confirmed reports of a federal officer shooting a person in the leg in Minneapolis during a traffic stop. It comes a week after an ICE agent fatally shot a woman in that city. Officials say the victim was a Venezuelan illegal immigrant attempting to evade arrest. A group of federal agents and Minneapolis police wearing gas masks have now fired tear gas into a crowd gathered close to where the shooting happened. And the US State Department is set to stop issuing immigrant visas to people from 75 countries. A source says the order is likely to target foreigners that the authorities believe could require public assistance while living in the US. We're told the move would apply only to people seeking to live and work permanently in the US, not tourists or temporary workers. Impacted countries include Brazil, Somalia and Iran. Well, Mozambique's president has told Bloomberg exclusively that the country will only start talks with creditors to renegotiate its debt after reaching an agreement on a new programme with the International Monetary Fund. The gas-rich African country's in talks with the IMF on a new facility to stabilise the economy, also to curb reliance on its natural resources and to restore investor confidence. Take a listen.
Tudo isto vai jogar para que
all of this will help ensure that Mozambique can position itself in the best possible way for its growth. But I reiterate that it is not enough to achieve the country's growth in technical terms. We really need this growth to be reflected in development, and this development has to do with the lives of the people.
So those are some of our top stories around the world, but it is a blockbuster day for earnings that kicked off already with TSMC, and you can see those results lifting NASDAQ futures already up 0.3%. So a gap here between them and S&P E-minis. TSMC, to remind you, saying that they're going to see sales growing by close to 30% in dollar terms. CapEx set to surge. They see it surging in 2026 at $52 billion to $56 billion. Let's also have a look at European futures as well. If we can bring those up, we're expecting a rise of 0.5% when we get to the market open. And so we count down to that positivity on both sides of the pond, this AI optimism being fueled as well, whilst the geopolitical risk seems to ebb for now when it comes to Iran and the tariff story for today. Well, coming up, we will turn back to that geopolitical story. Denmark's foreign minister saying a fundamental disagreement remains between his country and the US over Greenland. We'll be speaking to the former US ambassador at large for Arctic affairs. That conversation coming up next. This is Bloomberg. Good morning. Live from London, this is Bloomberg Daybreak Europe. I'm Lizzie Burden with your top stories. TSMC smashes estimates for net income and gross margin. The numbers from the world's biggest contract chip maker adding to hopes that the AI trade has room to run. Meanwhile, oil falls after President Trump signals he may hold off on attacking Iran for now. Silver slumping following its blistering rally. Plus, no deal on Greenland. Denmark says a fundamental disagreement remains with the US after talks in Washington. German soldiers arrive on the island today as NATO allies look to boost their military presence. If you're just joining us, it's 6:30 a.m. in London. Good morning to you. Welcome to Thursday. Your markets look like this. NASDAQ futures boosted by those TSMC earnings. But today we've got oil down after Trump saying that he's going to hold off on attacking Iran for now. Silver also down because of the lesser need for safe haven assets, but also because the president is holding off on adding to tariffs on critical minerals for now. So, as I say, in these markets today, it seems to be more about what President Trump is not doing than what he is doing. But turning over to the front pages now, let's have a look at the Financial Times. So we've got President Trump taking this more measured tone when it comes to Iran after he said that he'd received assurances that the government had stopped killing protesters. He didn't say, though, if military intervention is off the table. So we keep an eye on that geopolitical risk. But we turn over to Europe as well, because staying with the geopolitics, Bild this morning leading on the first European troops landing in Greenland, and that's just 7 hours after those inconclusive talks in Washington. So this German newspaper reporting that the deployment had been prepared for days, but it was deliberately kept a secret until it happened. Finally, let's turn over to the Wall Street Journal now. They've got banking bosses having this sudden realisation that maybe the president's becoming more of an adversary than an ally. And they look at JP Morgan CEO Jamie Dimon's gentle suggestion that chipping away at Fed independence is probably not a great idea. But you can get a roundup of all those stories and everything you need to know to get your day going in today's edition of Daybreak, which, as ever, terminal subscribers can find by typing DAYB GO. Now, let's get back to the geopolitics. The Danish foreign minister says a fundamental disagreement remains after a high-stakes meeting with the US over Greenland. Germany is taking the lead of European nations sending military personnel to the Arctic territory, as President Donald Trump says NATO would be more effective with Greenland in US control. Joining me now, I'm pleased to welcome Mike Sfraga, Interim Chancellor at the University of Alaska Fairbanks and former US Ambassador at Large for Arctic Affairs and former chair of the US Arctic Research Commission. Ambassador, thank you so much for staying up late for us this morning. We really appreciate having you. I want to ask about what you make of President Trump's claim that the US needs Greenland for national security. How much purchase did that idea have when you were appointed by President Biden? Good morning.
Yeah, good evening from Alaska and good morning, Lizzie. I agree that the United States does need Greenland, as in fact NATO needs Greenland for our shared security. It's more about the approach. We need Greenland to be a part of the transatlantic alliance. They are. They need to remain a central pillar to transatlantic security. They are. I would simply think that by reinforcing their position in the Arctic, by reinvesting in Greenland, the United States, the EU, NATO, that really gets to the end game, and that is that having Greenland be a component of the NATO, North American Arctic, the Arctic security architecture is fundamentally important to all of us. It's the approach. And I do not believe that having Greenland to be a 51st state or part of the United States enhances our Arctic security. In fact, it might shred the NATO alliance. Fraying is already happening. We're seeing it today. There are likely many approaches to get to where the president and the administration would like to go without fraying the alliance, without causing ripples in the alliance, and without disenfranchising a long-time Arctic and NATO ally.
Well, let's discuss those approaches, because it seems President Trump isn't giving up here. Is it legally possible for the US to buy Greenland?
If Greenland prefers that they would like to be purchased by another country, yes, of course. First, they have to choose whether or not they would want independence, would like independence, and when they would vote for independence from the Kingdom of Denmark. Then the Greenlanders decide their future. And if they decide that their future is better placed in some kind of alliance with the United States, it's up to Greenland to go forward and do so. But they have said very strongly, in fact, today, all day, Alaska time, that, in fact, the Greenlanders would prefer to stay with Denmark, given the choice. to stay with the U.S., to go with the U.S., or to stay with the Kingdom of Denmark. They prefer the Kingdom of Denmark. They also prefer to choose their own path forward, which is why I suggest there's probably a better way than to cause ripples through the alliance, to form an unsettledness in the alliance, and that does nothing but fuel our adversaries who do want to separate us from NATO. They do want to see the ripples in the alliance. They do want to see disenfranchised countries within Europe. That feeds adversaries. It does nothing to strengthen us.
But let's talk about another option, which the president hasn't taken off the table, Ambassador, and that is a more aggressive option. How likely is it the US troop presence that's already in Greenland morphs into an occupation, that the troops that are there change in function, when we've already seen what's happened in Nigeria and Venezuela?
Yeah, it's troubling because, again, I think we can get there much quicker in terms of our shared alliance, our shared security. There are only a few hundred U.S. Soldiers in and military personnel at Bidavik Air Base. Pretty important, pretty potent air base, but nevertheless not enough to take over the Greenland. And in fact, you would trigger, interesting enough, Article 5. Article 5 says that if a country invades a NATO territory, the other NATO allies are then subject to protect that country. So in effect, you'd have a NATO country triggering Article 5 to defend a NATO country. I don't see that happening. I sure hope it doesn't. I do not see that happening. What I see happening, unfortunately, is a fraying of the alliance. I think that is why you see Germany and France and Norway and Sweden announcing that they will send troops for Arctic endurance, a joint operation that's signaling, but it's also domain awareness operating in the north. It's a good thing. Also why we hear now through open source reporting that France and Canada are either contemplating or have decided to open consulates in Nuuk. Again, functionally very good. I think it holds the alliance together, but I think it's also signaling to the United States that they have NATO and European support. Greenland does, the Danish government does, to support their own independence and to honor borders, which is a fundamental component of the international rules-based system.
Could one option for Greenland and Europe be to try and lure President Trump with a minerals for security style deal like you've seen with Ukraine? One of our colleagues, Javier Blas, has argued that Greenland's mineral wealth is overhyped, so I wonder if this is even possible.
Well, it's a possibility. I do believe Greenland has significant holdings in rare earth and critical minerals. The issue for Greenland, like my own state of Alaska, although I think it's much easier here in the state of Alaska, is that it's very hard to get through, very expensive. They need roads, energy. It's very, very difficult to operate in the Arctic. It's very expensive to operate in the Arctic. So yes, critical minerals, rare earth minerals, that's part of it. There could be some quid pro quo there. I would argue perhaps a different way. I think I can get us to the end game. And if the end game for the United States and our allies, but mostly for the United States, is that we want Greenland to be absolutely embedded in the NATO alliance, to be part of this trans-Arctic alliance, the 7 Arctic nations that are part of NATO, I call it the trans-Arctic alliance. If that is our end game, here is a path that I think could be quicker, cheaper, and without breaking glass among our own friends, and that would be to take some portion of resources. There's open source reporting that the president has contemplated or is actually thinking about in a very strong way, $100,000, between $10,000 and $100,000 for each Greenlander if they would decide to be part of the United States. If you took, and that's about $6 billion or so, if you took that and said we're going to invest $3 billion in U.S. security assets in Greenland, I think you can get to the end game of opening bases that the United States closed, well over a dozen, putting troops on the ground, U.S. troops. By doing that, you're investing in our allies. You also take a portion of that and invest it in civil society, education, research, helping them open up the diversified economy, tourism. That's the way to go about this. I think quicker, faster, and I think smarter for the United States and the alliance.
OK, Ambassador, we really appreciate your expertise and experience. Mike Sfraga there, Interim Chancellor of the University of Alaska Fairbanks and former US Ambassador at Large for Arctic Affairs. Well, coming up, Wall Street bank stocks slump despite some strong earnings as analysts question the trajectory of the US banking rally. We'll unpack the disconnect next. This is Bloomberg. Welcome back to Bloomberg Daybreak Europe. Now to our top corporate news. Elon Musk's XAI is blocking all users from being able to create sexualized images of real people with its Grok chatbot. The company says they've implemented technological measures to prevent the editing of real people in revealing clothing. It comes after widespread condemnation from governments around the world who threaten legal bans and action. Elsewhere, the US has imposed a 25% tariff on imports of certain advanced semiconductors, including Nvidia's H200 chip. It marks a key step in an agreement blessed by President Trump, allowing Nvidia to ship the AI processors to China. Chips imported to support building up the US technological supply chain will be exempt. And here in Europe, Richemont indicated higher on TradeGate this morning. This is after the company reported sales jumping in the final months of last year as holiday shoppers splurged on its Cartier jewellery. We also have ASML higher on TradeGate off the back of the TSMC earnings that we reported earlier. Well, staying with the earnings story, America's biggest banks are posting bumper results for the fourth quarter, but investors are questioning the lenders' long market rally, given a shift in tone on financials from the White House. Citigroup CEO Jane Fraser weighed in on a recent proposal from President Donald Trump to cap credit card interest rates. Take a listen.
A rate cap is not something that we can support. And I think the reception from the Hill also seemed less than enthusiastic from what we could tell. And just to be clear, the impact to us and other banks would just be dwarfed by the severe impact on access to credit and on consumer spending across the country. These things just don't work out as intended.
Bloomberg's Charlie Wells is here with an update. Charlie, just take us up to speed on these latest earnings.
Well, Lizzie, Wall Street is really not liking what it's seeing so far this earnings season. We are seeing a lot of red on the screen from these banks that have already reported some negativity in the market. And this is despite some really bullish signs that we've seen from a number of these banks. If you take a look at some of these pockets of positivity coming out of these reports, you see an 84% growth at Citigroup in their financial advisory service. You really saw some strength in equities trading at Bank of America. If you take a look at that, you actually see that their equities traders had their best fourth quarter ever. And then Wells Fargo also reported a decline in net charge-offs of 16%. So that is speaking to the broader health of borrowers, of the consumer. But despite these fundamentals, despite the strength, you're seeing some questions. And where we really got a lot of questions yesterday was on expenses. So you saw analysts questioning executives at these banks about executives and some answers that the market didn't seem to like. So you saw at Citigroup, they avoided giving dollar guidance going forward. At Bank of America, analysts were saying they see costs as getting worse. And at Wells Fargo, executives really had to focus on some severance expenses, and the market really seemed to anchor to this commentary.
OK, Charlie, but we're not done yet. We've got plenty more to come today. What should investors be bracing for in today's reports from Wall Street?
Well, Lizzie, there's a world where we see a shift in tone, and that's because the two banks, Morgan Stanley and Goldman Sachs, arch rivals, are shaped a little bit differently from a business perspective from the other banks that we've heard. They have a lot of strength in investment banking and trading historically. We're expecting to see some real growth from the quarter, particularly in investment banking. That's been telegraphed from these banks, and trading as well. We've seen that from the other banks coming out strong. But the question here really is it too late? We've been tracking the KBW Bank Index all week. You can take a look. You see it trending down as we've moved through this earnings season. And that is a question. Is the mood music changing? Are these reports not enough to counter some of the negativity, some of the targeting from the White House that we've heard in the financial sector?
OK, Bloomberg's Charlie Wells all across these bank earnings for us. Thank you so much, Charlie. Well, just turning back to the earnings picture elsewhere, we have ASML indicated higher on TradeGate this morning. This is after the TSMC results that we broke for you earlier, expecting capital spending to surge as much as $56 billion in 2026. Now, that's stronger than anticipated, and it signals the confidence in the longevity of this global AI boom. And I'm pleased to say we have a guest who has big thoughts on this. She says the biggest challenge in Q1 isn't about predicting the future of AI, it's preparing portfolios for every version of it. Joining me now is Charu Chanana, Chief Investment Strategist over at Saxo. Good morning to you, Charu. I'm thinking about these TSMC earnings. I wonder whether they're going to spark another round of flows from the US into big tech in Asia. Good morning.
Hi, Lizzie. Good morning to you, and thank you for having me back. No, absolutely, such a blockbuster set of results from TSMC, and it's not just about US or Asia. If I take a step back, I think it does bring back that focus on AI capex that had started to become a question since the end of last year. It has started to become it has brought the focus back on AI demand as well, which was a question. I think it very well emphasizes that there's real demand for AI and there's real capex going into AI. But having said that, coming back to what you are asking, I think this AI story has really moved away from exposure and the beta story that we've had much of the last 2 years to really being about selectivity right now. And that selectivity does bring a few factors in focus. I think very much in focus will be the bottlenecks. Where are the bottlenecks? Because that gives pricing power, that gives cash flow visibility to these AI plays. And when I talk about bottlenecks, they are particularly on the hardware side, which is what brings the focus to Asia. I think really the picks and shovels of the AI value chain are in Asia, so that continues to bring that divergence that we've seen since the start of the year. The AI story really rotating out of the US big tech that had rallied on the beta basis now towards that selectivity into hardware. And I think the next focus would also be on really the infrastructure side, the data centers and the energy supply. Where does that power supply come from to really keep that AI story going into the future?
Well, yes, it was notable yesterday that the biggest US grid operator dialed back its forecast for power demand growth yesterday. I wonder whether that actually suggests that the AI boom is being overstated here, Charu.
Well, some of these things are a little bit more cyclical in nature. I think that is also a risk we run into when we talk about, say, for example, the memory players that have been very much in the focus. The glut, does come as a result of those shortages because they do ramp up production in a huge way. But with the power thing, I think that is a different story compared to this cyclical memory space because there is a real shortage of sources. We've been for some time trying to shift from our energy sources towards clean energy, whereas clean energy is right now not in a place to be able to supply the amount of power that is needed to run these data centers. So I think every other forecast that I've seen, maybe it's from the IEA, we see massive increase in power demand expected over the next 5 to 10 years. So I think the power supply story is really about whether which kind of fuel really helps us in satisfying that demand. And I think the answer is not the traditional or the clean energy. It has to be a blend of the two because the demand is just so massive on those fronts.
And Charu, if we think away from tech, we've got futures higher this morning, but stocks really haven't been panicking about the Fed independence threats, despite Trump's pressure on Jerome Powell. Should we be expecting less of a sell America trade and more downside risk that's specifically targeted at the dollar?
I think we did get a little bit of a knee-jerk reaction to those headlines relating to Fed independence at the start of this week. But it did not, you're correct to say that it did not transform into that Sell America theme. And the same goes for this big AI story as well. I said we do see rotations out of the US. And I think the intention of those rotations is really to diversify out of those crowded areas that, investors have been really focused on over the last 2 years. Now, starting off this year, we've seen geopolitics come into the investing landscape in a huge way. We've seen policy risk come back in the investing landscape in a big way, and we are running into the next week towards 1 year anniversary of Trump's inauguration, which also means there could be some more extreme policy announcements that the market is really anticipating or fearing at this point. So I think it is really a story where US stays the anchor because we know that is where most of the applications around AI are being developed, and the productivity advantage as well is going to flow through in the US. I think that remains the biggest market, in the size of the economy or in portfolios as well. But investors are very, very conscious of how crowded those exposures have become. And so rotations are likely to continue. We've also seen this affordability focus from President Trump himself. And in fact, that has also led to this rotation out of the big tech space into the small caps. Particularly yesterday, we saw that move, NASDAQ being down 1%, whereas the small cap Russell 2000 index was actually ended up higher. So I do think that the Fed's independence story will continue to be a factor. And I think we do need a little bit of that stable to weaker dollar for those rotation themes also to continue. But again, this is not a place where we start to talk about Sell America like we did back in April at some point of time where the tariff game had really evolved.
Well, the Bloomberg Dollar Spot Index up a touch this morning. Charu, as ever, a pleasure to get your insights. That's Charu Chanana, Chief Investment Strategist at Saxo. Plenty more coming up, so don't go anywhere. This is Bloomberg.
If you bring the caps down, you're going to constrict credit, meaning less people will get credit cards, and the balance available to them on those credit cards will also be restricted. And so you have to balance that against what you're trying to achieve from the affordability. We're all in for affordability. You all know how we run our consumer business. It's the most fair to the consumer, and that's why we get good growth and high customer scores.
Bank of America's CEO Brian Moynihan addressing President Trump's proposed cap on credit card interest rates there. And that populist pivot really dominating the narrative, it seems, when it comes to these bank earnings, despite, for example, in the case of Bank of America, that beat on net interest income. Citi warning, as we heard earlier in the programme, that Trump's social media edict, if enacted, could actually lead to an economic slowdown. Now, it's not just Wall Street earnings we've been getting this week. Already this morning, we've had TSMC earnings. And I just want to show you the potential read across into the European session, because look how ASML here in Europe has been moving in tandem with TSMC. So ASML is indicated higher on Tradegate, as is Richemont, by the way. They had earnings too this morning, so keep an eye on those shares at the European Open. We've also got lots of risk events on the docket still to come today, and we have German data coming at 9 a.m. London time. In just a few minutes, we'll get UK GDP. Then we'll get the rest of the US bank earnings for today and even more US economic data. At 1:30 p.m. London time, it's initial jobless claims. A reminder that later on we'll be speaking to the US ambassador to Belgium. That exclusive interview at 7:30 a.m. London time on the opening trade. Anna, Guy and Tom are up next. This is Bloomberg. Good morning.